from America's finest city. This is Talk San Diego on ESPN 1700.
What's happening, gang? You are back live in the Secret Stash, tracking down some cool local people, talking about some cool, and I'll even say timely, local stuff. Who knows, Steve, right? You know, maybe tracking down a story or two in the process with a singular goal always of leaving you a little better than how we found you. I'm your host, Jesse Ibanez, a co-founder of the Greenhouse Group. Now, you might say my day job, Steven, is helping folks get into and out of homes right down here in the heart of San Diego. If you're in that space or this conversation inspires you to do so, I invite you to track us down at thegreenhousegroupinc.com. A little bit more about how we might be able to help you. And speaking of helping you today, I feel like right now is that time of the year. Like, you know, if there was a good sound effect, it would be like the dun, 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 right? Because you got about what, Steven, about a week and a half left? Correct. To get all your financial ducks lined up in their rows. And that's why we brought back in, so longtime listener, longtime caller, Steven Wendroff. And Steven, by the way, is quite a, you might say, gangster of his own right in the CPA realm. You can track him down at stevewcpa.com, and we'll give you all the contact info in due time. But, Steven, the context today is year-end tax planning, and the reason why that is so critical and the solid that you've done for Stash Nation today is you've tracked down the 9 must-haves for, you know, small business cats, right, getting their affairs lined up before the end of the year, and also 7 equal must-haves for everybody's personal returns. And you got about a week and a half to do it, right?
Exactly.
So, my man, and just for folks who didn't hear you on the last time you were on or don't know you yet, why don't you go ahead and introduce yourself?
Thank you, Jesse, and thank you very much for welcoming me back. My name is Steven Wendroff, CPA in San Diego. Been in San Diego over 30 years, practicing on the corner of 9th and Washington, and excited to be here.
Well, excited to have you here. The show that you did last time was one of our most watched, and we wanted to have a lot of people's opportunity to ask any questions they might have as well. So if you want to call in, that line's open at 866-405-1717. And my man Adrian, producer Adrian, by the way, thank you, my man, for coming in and helping us each week. He's actually holding the conch right now. This is being streamed live over on the Meerkat app, and you can check us out at our Twitter handle at Follow the Stash. If you want to tweet any question live, we'll get it asked and get it answered. Steven, let's get into this, my man. We got a lot of ground to cover, okay? Let's put the mitts on. And I want to dive into the business realm first, because there's a lot of small business owners in San Diego. I know a lot of small business owners tune into the station. So let's get started. If you are a small business owner, okay, there's 9 must-haves. You got to have your ducks lined up in the row. The first one, and this is in no particular order of importance, but talk about deferring revenue, because that's a big one, right? Let's get started with that.
Sounds good. Well, the goal for tax planning, obviously, is to reduce your taxes. So part of that...
Imagine that.
Part of that is looking at 2 years together. One would be 2015 and 2016. If you feel like you're going to be in a higher tax bracket in 2015 versus 2016, the goal would be to reduce your taxable income for 2015. There's several ways to do that. A few easy ones would be to defer billing, defer income. How do you defer income? The easiest way is to defer your billings. Wait until January 1st to send out billings. Or if you are on a cash basis, hold off on collecting money until January 2016.
Yeah.
Some other thoughts would be to accelerate payments. If you're a cash basis business, an easy thing would be to pay all your bills before the end of the year. May even look at some bills that you would have due in January and pay those in December. If you're tight on cash, it's easy to maybe use your line of credit from the bank to pay those bills. So the goal would be to reduce your taxable income by deferring the revenue and accelerating the payments. Those are just 2 simple things.
And it's usually a rule of thumb. It's probably a terrible one, but I remember I got given this somewhere along the line, that in tax planning you normally want to defer as much now. Even if you have this belief or you're an optimist, you think you might make more money next year. The wisdom is to try to knock off as much as you can in the current year.
Exactly. And our philosophy is pay little as you can today and worry about tomorrow.
Yeah, fair enough. Okay, so got it. Defer revenue. What about the opposite end of that, which is increase expenses?
Exactly. So there's different ways you can increase expenses. You could go through your bills that are open and pay those all by the end of the year. Another one is that the government allows you to write off equipment purchases. Right now, it's $25,000. However, Congress has a history of extending that to $500,000, and
wow.
The strong belief
that's a big jump.
Exactly, but that's the way it's been for the last few years. Is everybody thinks it's $25,000. However, Congress meets either the end of this year or early next year, makes it retroactive to January 1, 2015. So again, if there's any equipment that you've been thinking about buying, this would be a good time to buy it. We're a firm believer also, don't buy something just for tax benefits. It's something that you definitely need, will need in the future.
Right.
But it's, very easy to look around, depending on what kind of business you have, and spend quite a bit of money on equipment purchases.
Think twice, fellow realtors, about purchasing that big, gigantic Humvee just for promotional purposes, right?
Exactly.
I love it.
You could, again, like Jesse mentioned, you could buy a vehicle if it's over 6,000 pounds. You could write that off all in 1 year. So if you're thinking of replacing your vehicle with if you have a business that utilizes trucks,
right?
Exactly.
Okay, so what about so if you've got a pension plan in place, is now the time to maybe review that too?
Exactly. There's several different pension plans that could work for people. There's some plans that need to be in place before the end of the year, and there's some plans that you could actually open by the due date of your return. The simplest pension plans, obviously, is the IRAs. They could be funded by April 15th. However, they're limited based on your age, either $5,500 a year or $6,500 if you're over 50 years old. However, if you are showing a lot of profit, another plan would be a SEP plan. That's not due until the end of the filing of your return, so you could actually file an extension and not have to fund that until October 15th. And usually that's about 20% of your net income. The drawback on a SEP plan is you have to include all your employees. So if you're a single employer company, it could work perfect. If you have a lot of employees, it could work against you. The other type of pension plans is a 401k, similar that large businesses offer, but you could have a single employee 401k plan for a business that just hires yourself. And with that, you could fund up to $55,000, and part of that funding is not due till the due date of the return. And one last plan, if you're showing a lot of profit and you don't have very many employees, is what they call a defined benefit plan. With that plan, you could probably fund $100,000 or more into it. However, it does require actuary and different administrative costs to set that up. So you could probably budget $2,000 to set that up in an annual fee, where the other plans that I mentioned are very minimal cost.
Yeah. And if you're like me and you're listening to Steven, you can see why we've got him on for this year-end tax planning session, because this man knows his stuff. And you might also chuckle at the idea of thinking about Jimmy and Janie on payroll, but this could actually be a good year-end tax plan, right? Or strategy.
As far as hiring your kids on payroll, absolutely.
Yeah.
There's two things to look at when hiring your children on payroll. One is if you're a sole proprietorship and they're under 17 years old, you're not subject to Social Security tax. So basically, you could pay them $6,000, get a $6,000 deduction, and if you're in the 40% tax bracket between federal and state, that's a $2,400 savings, and the children have no tax liability. Of course, if you get audited, you'd have to support what they do, take out the garbage, file things, go on errands for you. Depending on their age would justify how much you could pay them. And And then if you're a corporation, you would have to withhold Social Security tax on them, and that could cost you, say, 15%. However, again, if you're in the 40% tax bracket, there's a 25% savings. So there's a substantial savings, and it's very simple to include your children on payroll.
The lesser of two evils, possibly even creating two evils in the process. Obviously, devil, though, being in those details, and a lot of numbers to vet through. So we ran through 5 of them right there live, gang. So talking about deferring revenue, the dance between 2015, looking at the 2016, and then perhaps juxtaposed to increasing expenses, how both of those are probably alpha and beta in the plan, but then also looking at the pension plans, making sure you're reviewing those, talking about the several different options, buying equipment if it's appropriate to do so, and then maybe even putting little Jimmy and Janie, the kids, on payroll. Gang, there's actually 4 other ones on that list as well for businesses. So if you are listening right now and that resonates with you, you're a small business and you're hearing some of this stuff, or maybe there's the other 4, which has to do with credits, bonuses, projections, and then withholdings, I'm going to invite you to grab Steven's free report that he actually created. You can catch that at thegreenhousegroupinc.com/year-end tax plan. I'll give that one more time. It's thegreenhousegroupinc.com/year-end tax plan, and we'll have all 9 of these laced out for you in a very sexy, downloadable PDF for you. So, gang, coming up, when you got a man like Steven Wendroff in the house, you got to have your alpha and you got to have your betas in alignment. The alpha being business, the beta being personal, and Steven, a lot of you might say commingling in these 2 strategies as well. So coming up, we're going to outline the 7 critical must-have tax strategies, year-end style for the personal game, right after this. Real Talk Radio San Diego. We'll be right back.